Welcome back to Insights That Matter, the show that takes you beyond the headlines and into the heart of what truly matters. Today, we're diving deep into the world of Glenmark Life Sciences, a company that's making waves in the pharmaceutical industry. With me today is our expert.
Delighted to be here.
Who's going to help us unpack all the complexities of this fascinating sector. Now, I know some of you might be thinking, pharmaceuticals. That sounds a bit technical. But trust me, there's so much more to it than just pills and prescriptions. We're going to be talking about resilience, innovation, and how this company is navigating a really challenging global landscape. Get this. They even had to temporarily shut down a major facility this quarter and still managed to come out swinging.
That's right.
Let's find out how.
To truly understand what's going on with Glenmark Life Sciences, we need to zoom out a bit and look at the global picture first. Think about it. We've got geopolitical tensions flaring up in different parts of the world, financial markets that are more volatile than a Bollywood dance number, and energy prices that are skyrocketing like a Diwali rocket. It's a tough time to be in business.
Absolutely. Especially in a globalized industry like pharmaceuticals. You can't just isolate yourself from what's happening in the rest of the world.
Exactly. And here in India, we've got our own set of economic challenges to grapple with. While developed economies are cutting interest rates, we're holding steady to keep inflation under control. It's a balancing act, and it has a ripple effect on companies like Glenmark Life Sciences. Take rising energy prices, for example. It not only hits their production costs directly, but it also affects their customers, who may have less money to spend on medicines.
It's like a chain reaction.
Yeah.
But let's talk about that production halt you mentioned. It happened at their facility in Ankleshwar, which is a major hub for them.
Absolutely. It accounts for a whopping 65% of their production capacity. Now, you'd think this would have completely derailed their quarter. But here's where it gets really interesting. They managed to recover a significant chunk of those delayed volumes within the same quarter. It's a testament to their operational agility and just how well they manage their supply chain.
Okay. That is impressive. But how did they pull that off? Did they have a secret backup plan? Like a hidden factory somewhere?
Not quite a hidden factory, but they did have some smart strategies in place. They were able to divert some production to other facilities and really ramped up their efficiency. They've also been strategically building up their inventory, kind of like squirreling away nuts for winter, to guard against any potential disruptions. Remember those geopolitical tensions we talked about? This kind of foresight really paid off for them.
So, they were prepared for the unexpected. It sounds like they're quite optimistic about finishing the fiscal year strong, too. What's giving them that confidence?
First of all, the Ankleshwar facility is back up and running at full steam. But they've also got some exciting new products launching and a healthy order book. They're not just bouncing back, they're charging ahead.
Okay, so they're weathering the storm.
Yeah.
But what about the financial side of things? We're talking about Glenmark Life Sciences, a company listed on the Indian stock exchanges. So the numbers are going to be in rupees.
That's right.
For our international listeners, 1 crore rupees is roughly equivalent to
about 120,000 US dollars. So when we talk about crores, think hundreds of thousands of dollars.
Perfect. That helps. Now, their revenue for the quarter came in at 507 crore rupees, which might seem like a dip compared to last year, but we know it's mostly because of that temporary shutdown.
Exactly. And it's important to note that this dip wasn't due to any pricing problems. They've actually managed to improve their gross margins to 55.6%, which is a significant jump.
Wait, hold on. For those of us who didn't major in finance, what exactly does gross margin mean?
Think of it this way. You're running a lemonade stand. You sell a glass of lemonade for, let's say, 10 rupees. Your gross margin is the profit you make on that glass after you've paid for the lemons
And sugar.
and cups. The higher your gross margin, the more efficient you are at running your lemonade stand, or in this case, a pharmaceutical company.
So, in Glenmark's case, a higher gross margin means they're making more money on each product they sell, even after accounting for all the costs of making it.
Precisely. And the fact that their gross margin has gone up so significantly, even with the production hiccup, tells us they're doing something right.
So how did they manage to boost those margins? Were they selling their products at a premium?
It's a combination of factors. For one, they've been very strategic with their product mix, focusing on higher value products. They've also launched some new products in key markets like the US and Russia, which have contributed to those healthier margins.
So they're not just making more, they're making more on each product they sell. That's smart.
Absolutely. And they've been incredibly disciplined with their cost control, too. which has helped them maintain a stable EBITDA margin.
EBITDA margin, that's another one of those finance terms.
It is, isn't it? But it's not as complicated as it sounds. Think of EBITDA as the operational profit. It's essentially the money they make from their core business activities, before taking into account things like interest, taxes, depreciation, and amortization.
So, a stable EBITDA margin means they're keeping their operations lean and efficient, even with the challenges they've faced.
Exactly. And that's a really positive sign, especially in this kind of economic climate. It's fascinating how Glenmark has managed to keep its financial ship steady despite the rough seas of the global economy. Their performance this quarter really highlights their focus on cost control and efficiency.
Right, you mentioned stable EBITDA margins earlier, so even with revenue taking a hit from that Ankleshwar situation, they still managed to keep their operational profit healthy.
Absolutely.
That's impressive.
For this quarter, their EBITDA came in at 143 crore rupees, giving them an EBITDA margin of 28.2%. Now remember, we're talking about operational profit here. This is the money they've earned from their core business, which is really a testament to their efficient management.
Okay, that makes sense. And what about the bottom line? How much actual profit did they end up with after all the expenses and taxes?
Well, their profit after tax, or PAT, was 95 crore rupees for the quarter. To put that into perspective, it means for every 100 rupees of revenue, they generated almost 19 rupees in profit. That's a pretty healthy PAT margin of 18.8%.
Okay, so even though their revenue took a dip, they're still making a decent profit. But I'm curious, how does this quarter compare to their performance for the entire first half of the fiscal year?
Let's zoom out and look at the bigger picture. For the first half of fiscal year 2025, their revenue stood at 1,096 crore rupees. Now, that's a slight decrease of 6.7% compared to the same period last year.
So that Ankleshwar situation really did have an impact on their overall revenue for the first half.
It did. But despite that dip, they managed to maintain a healthy gross margin of 53.2% for the first half. Remember a lemonade stand analogy.
Right. This means they're still squeezing a good amount of profit out of each product, even with the overall sales being slightly lower. Right? That lemonade stand analogy really helps. So what about their EBITDA and PAT for the entire first half?
Well, their EBITDA for the first half came in at 308 crore rupees with a margin of 28.1%. And their profit after tax for the first half was a respectable 207 crore rupees with a margin of 18.9%.
So taking a step back and looking at the entire first half, it seems like they're in a pretty solid position financially. But let's talk about their future. How much are they investing in research and development? Because in the pharmaceutical industry, innovation is key, right?
Absolutely. You can't just stand still in this industry. You've got to keep pushing the boundaries and coming up with new solutions. And Glenmark Life Sciences gets that. They've spent 36 crore rupees on R&D in the first half of the year, which is about 3.3% of their sales.
That's a significant chunk of their revenue. Going back into research and development, what are some of the key areas they're focusing on?
Well, they're really interested in developing new technologies that can make their manufacturing processes more efficient and cost-effective. One of their big focuses is flow chemistry, which has the potential to really revolutionize the way they produce medicines. They were hoping to run some qualification batches for this new technology in October, but it looks like they've had to push it back to December.
I see. So meeting the current demand for their products is taking priority.
It seems so, over these new advancements for now. But delays happen, especially in the world of cutting-edge research. It's a balancing act. But it's clear they're committed to innovation and pushing the envelope. They're also working on another exciting platform, which they're keeping under wraps for now. It's like a secret recipe they're perfecting.
Intriguing. Well, I'm always excited to hear about companies investing in the future, especially in a field as important as pharmaceuticals. But innovation isn't free. How are they funding all of this?
That's where their strong financial position comes in. Remember, Glenmark Life Sciences has always prided itself on being a debt-free company.
Yeah, I remember that from our previous deep dives. It's not very common to find companies, especially in the growth phase.
Exactly. They don't have any debt on their books. And they've managed to maintain that debt-free status, while also generating a healthy cash flow from operations. In the first half of the year, they generated 134 crore rupees in cash from their core business activities.
That's great. It means they're not relying on external borrowing to fund their growth. They're generating the cash they need.
Precisely, from their own operations. And they've got a nice cushion, too. As of the end of September, they had 446 crore rupees in cash and cash equivalents on their balance sheet. This financial stability gives them the freedom to invest in growth opportunities and weather any unexpected economic storms.
It sounds like they're in a really strong position to capitalize on the opportunities ahead. Speaking of opportunities, we talked earlier about some of the challenges they're facing, particularly the softening of the Latin American market and that increased competition from Chinese API manufacturers. But are there any bright spots on the horizon?
Definitely. They're actually quite optimistic about the Biosecure Act in the United States. This act aims to encourage domestic production of essential medicines, and Glenmark believes it could create new opportunities for Indian companies that meet the quality and regulatory standards.
So they're hoping to tap into the U.S. market, which is a huge opportunity for any pharmaceutical company.
Absolutely. And they're not putting all their eggs in one basket either. They've been actively pursuing new CDMO projects.
Right, which is a growing trend in the pharmaceutical industry. You mentioned earlier that they have 2 new CDMO projects in the pipeline. Remind me, what does CDMO stand for again?
CDMO stands for a Contract Development and Manufacturing Organization. Basically, they're partnering with other pharmaceutical companies to help develop and manufacture new drugs. It's a way for them to diversify their revenue streams and tap into the growing demand for outsourced pharmaceutical development.
That makes sense. So they're not just focusing on their own products, they're also offering their expertise in manufacturing capabilities.
Exactly. To other companies. It's a smart strategy, especially in a globalized market where collaboration and partnerships are becoming increasingly important.
It's amazing how much ground we've covered, from navigating global economic storms to diving deep into Glenmark Life Sciences financials, but beyond the numbers. What really struck me is their forward-thinking approach.
I completely agree. They're not just reacting to the current market, but actively shaping their future. They're investing in R&D, expanding their capacity, and diversifying their revenue streams. That's what sets them apart.
Right. And they're doing all this while staying true to their values, like remaining debt-free.
Right.
And prioritizing sustainable practices. It's refreshing to see a company that's not just focused on the bottom line, but also on doing things the right way. But here's a question that's been on my mind. The pharmaceutical industry is in a constant state of flux, with new technologies and trends emerging all the time. How do you think these changes will impact Glenmark's future?
That's a great question. We're seeing a shift towards personalized medicine, where treatments are tailored to individual patients. Also, there's a growing focus on biologics and biosimilars, which are complex medicines derived from living organisms.
So how can Glenmark adapt to these emerging trends? Do they have the expertise and infrastructure to compete in these new areas?
Well, they've already dipped their toes into the CDMO space, which shows they're willing to partner with other companies and leverage their expertise. They're also investing in new technologies like flow chemistry, which could give them an edge in manufacturing these complex medicines.
It seems like they're taking a multi-pronged approach, which is probably wise in such a dynamic industry.
Absolutely. And remember, they have a solid financial foundation, which gives them the flexibility to adapt and invest in new areas as they emerge. The pharmaceutical industry is a marathon, not a sprint, and they seem to be well prepared for the long run.
Well, listeners, I think we've successfully unpacked Glenmark Life Sciences. We've seen how they've navigated challenges, capitalized on opportunities, and positioned themselves for a bright future.
It's been a fascinating journey through the world of pharmaceuticals, hasn't it?
Absolutely. We hope this deep dive has given you a better understanding of this complex and ever-evolving industry. And who knows, maybe it's even sparked your curiosity to learn more.
Always a good thing. Knowledge is power, especially in today's world.
So before we sign off, we have one last request for you. If you enjoyed this deep dive and found it insightful, please hit that like button and subscribe to Insights That Matter for more such deep dives into the companies and trends shaping our world.
Until next time, stay curious and keep learning.